All right, good deal. Thank you, Morgan. Appreciate it. First, let me do a quick audio check. Just let me know if you can hear me okay, and then two, if you can, let me know if I need to raise or lower the volume. If it's overmodulated or something like that, I can certainly turn it down. All right, cool. Looks like moreover, we're coming through just okay. All right, good stuff. Will, first, like to say thank you very much to Morgan for inviting me and having me on. I do appreciate it. I always like to participate when and where I can. That the idea is to try to help folks in this business, and so I'm glad to be here, and I appreciate the invitation very much. So let's get started. I thought we'd talk about trading around the opening bell. And by the open, what I'm referring to specifically for those who, let me start by asking this: how many of you trade futures products? E-mini, S&P, Dow, Nasdaq, Russell. Okay, good. So then, the reason I think it's important to differentiate and or to really specify what I mean by the open is I'm talking about the cash bell, the regular trading hour session that opens with the stock market there at 8:30 Central, 9:30 Eastern. So, and then let me just pause for a sec and then also say to Mark and Tom, you guys that don't necessarily trade futures products, one, you might want to consider after I show you what I'm going to show you, the possibility that you really may want to look into this, or two, if not, I'll tell you that you can actually use what I'm going to show you for, SPYs, diamonds, that kind of thing too, if you wanted to trade something, in an equity line and not necessarily in the futures. But maybe after I show you what I'm going to show you this morning, you might want to, consider looking into futures products. First thing I'll say is risk. My goodness, there is risk in trading. And if you trade, you know that. And if you don't, you need to know that there is indeed risk in trading. There's really substantial risk in trading futures and leveraged products like futures and options. To be honest with you, can actually manage to lose more money than you actually have deposited in your account because of the leverage that's afforded. For instance, if you were to figure what's the notional value of a S&P contract right now that's trading 1,400, well, at $50 a point, you can figure 1,400 times 50, it's somewhere around a $70,000 instrument or contract. And in most brokerage, discount brokerages, you could probably get a margin rate of somewhere around 500 to 1,500. So for practical purposes, we'll call it around $1,000 or so in margin requirement per S&P contract. So if you're trading a $70,000 instrument for $1,000 worth of margin, obviously you can see that you're afforded some pretty substantial leverage there. Same with options, that kind of thing. So just know that there's risk in trading, and it's very important that you understand how to assess the risk, especially in trading some of these particular products. It could be, listen, the risk, it can actually be a good thing. It's a different subject matter. It would be along the lines of trading psychology, but it actually really can be used to your benefit, truthfully. It's a different subject matter, but. So, okay, thought we'd talk about trading around the open. And again, what I mean is around the opening bell, 8:30 in the morning, Central, Chicago, for the purpose of futures, and or 9:30 for you guys that are trading, East Coast, New York equity. Here's kind of where I'm going with this. Now I'll be talking about the S&Ps primarily, but if you want to take just a half a second to grab yourself a pen and paper, now would be a good time to do it because you'll probably want to take some notes. I'll give you some reference points that honestly be a good thing to write down. And for instance, like there's a mid-caps, trader, there's some, different, people trade different things, right? And that's important too. You need to trade something that really suits your personality and your risk tolerance. You may be a Dow or a Nasdaq trader, which is fine. You can use this that I'm going to tell you to figure out how to trade those markets. And here's how you do that. The S&P right now on a 24-hour basis has an average trading range of about 23 points today. The Nasdaq 46 and the Dow about 209 or so, something like that. So if you take 23 and divide it into 46 for the NASDAQ, you can see that the NASDAQ moves about 2 points for every 1 point that the S&P moves. And I can tell you the Dow moves about 9. The Russell, however, will move about 8/10 of 1 point for every single 1 full point movement in the S&P. So the ranges that I'll give you for the S&P, you can use those conversions to trade some of those other products. And for like an EMD, all you'd have to do is find the ATR, a 24-hour session ATR, and, well, I guess really for that matter, you could just do apples to apples. If you wanted to do a regular trading hours ATR conversion for EMD and ES, then that'd be fine as long as it's apples to apples. But use either full session Globex or regular trading hours, the 405 minutes that transpires between 8:30 and 3:15, as long as it's apples to apples. All right, so we'll get started. One more thing I'll say, and I think it's important that we kind of, mention this. Trading right around the open, like I'm going to share with you today, can be a lot of fun, but I'll promise you that it definitely does not suit everyone's personality or risk tolerance. It's at times can be a highly energetic time of day and or move in the market, and it just doesn't suit necessarily everyone's risk tolerance. There are other times of day that may be better suited for some. I'll share with you how you can indeed do this, but I'm not going to say it's for every single trader's trade plan. So, you'd want to sim some of these techniques that I'll show you to sort of assess for yourself whether or not they work for you, and if they do, then good. I'm happy to help. So first thing that I think you want to do in the morning is you want to ask yourself, is there going to be news, big economic news that's to be released during the session in which I'm trading? And the way you can do that, one way, is go to forexfactory.com. I've listed the site there for you. It's free, doesn't cost a thing. And you want to look specifically, as I've noted here, for high impact events. High impact events on forexfactory.com are denoted by they're having a red folder next to them, a little red star event. The orange are medium impact, and they're still pretty important. The yellows, I don't give the time of day, couldn't care less about. They're low impact events, and they're just there. But the red impact events, you want to make special note of those. Now, I'm going to tell you too, hopefully it's the next slide. Well, here is a chart just at random that I pulled. It doesn't necessarily have to be anything even current. It's just to make a point. And that is that, there can be some really volatile moves and or swings right around these news events. I'm trying to find a little cursor or something if I can. Yeah, you can see my cursor now, I think, right? So here, this is a chart of the GBP, the pound sterling, British pound, and it's at 7:30 in the morning. So, there I'll tell you is high impact events that are released at 7:30 a.m. Central. And you'll want to be aware of those also. I'll share with you why in a minute, okay? Even if you're not trading at 7:30 in the morning, you're also going to want to be aware of whether there was high impact event news, econ releases that were released an hour before the cash bell opens. I'll share why with you in a minute. But if you're trading at this time of day and you didn't know that there was about to be news released, you can see that there was about 100 and, well, let's see, 201.80 to 033 is about 150 ticks here. 150 ticks unanswered, straight up, just straight from the low to the high. 150 ticks. That this is Central Time, Nancy, Central. And this is not even a recent chart, but it doesn't matter. My point is just really this, and that is that if you're going to trade around whatever time of day you're trading, you want to know if there's news. And if there is, you want to be aware of it and know what markets it's likely to affect. For instance, if it's payroll or interest rate, type of sensitive news, then you want to be sensitive to like bonds, payroll, ES, YM, NQ, even the DAX, that kind of stuff. But But the times that I'm mentioning are central. So 7:30 in the morning central, big news like payrolls and that kind of thing, and the pound, shoots up here 150 ticks. The point simply being that you want to be aware if there is news during the time of day in which you're trading. So we'll move on. So, all right, here's what I'm going to ask you to kind of just be thinking, like you're nothing really terribly specific, but you're just saying you're closing your eyes and you're sort of trying to get Forex factories, yes, are in Eastern, but you can set them to default to your time zone so that when they'll report for you in any time zone around the world, but they do default to Eastern, yes. So right around the open, before the open, and you don't necessarily know exactly what the opening print's going to be. It doesn't matter. What I'm saying is this. You want to ask yourself in general terms here. I'm saying a general assessment of the market on the open. You want to say to yourself, is this market opening inside yesterday's range or is it significantly outside yesterday? Why in the world why would that matter? And to me, I'm seeing that, like, if you're dead smack in the middle of yesterday's range, well, the market's saying to you, hey, we're happy here. We're sort of balanced. We're okay with where we've been and how we're trading. The market's, it's not terribly wound up. It's not overly strong or weak or anything like that. However, if it's significantly outside yesterday's range, okay, Morgan, then it's telling you a little something. And there's different ways to trade it too, because if you're 8 or 9 points higher than yesterday's close, well, obviously you can see that there was some pretty significant strength in that, right? And again, we're just on general terms right now. I'm going to get to the specifics, but right now this is kind of general. And there's also there's ways to trade. Like if you're in inside yesterday's range, then you want to be targeting or fading, considering fading anyway, yesterday's high or low, that kind of thing. For instance, like today, is anybody trading today? You see the S&P went right down to yesterday's low and bounced. I mean, it literally traded right to yesterday's low, to the very tick. And so it does matter if you're opening inside or outside yesterday's range. Next thing you want to do is you want to gather key numbers that you might consider points of inflection, pivotal, type things. Key numbers, important numbers. Yesterday's open, high, low, and close, very important. Overnight, high and low, very important. Any major pivotal numbers that literally, and this is not rocket science, okay, but literally almost jump off the chart at you. Like if you look back at yesterday and you say, man, there was major trade, and like the market pivots and trades around the 1397 area in the S&P for literally half of the day. Well, that should be significant. You note that, right? And that's an important level. It's where we started selling the market this morning, as a matter of fact. So just big pivotal kind of numbers like that. Now, here's the other thing. Here's the last thing. A lot of people don't think to do this, but this is actually pretty important. You can actually, too, you can go back, and this is why I said note if there was any 7:30 news, the early news before the bell, and look and see what the market did if there was payroll, or if there, like this morning there was continuing claims. Sometimes you'll get CPIs and PPIs and that kind of thing that come out 7:30 in the morning. You may get jobs and stuff like that 7:30 in the morning. So you go back and look and see, what did the market do? How did it react? Here's a for instance, and here's why I'm telling you this does matter, okay? You go back and you look at, here was a recent non-farm payroll. It goes and trades to a pivot high of 1389, all right? Now, we come into the regular trading hour session, and you start to try to figure out how you're going to trade this market, and you look and you say, wow, look at there. The news early this morning had pivot high 89. 89, you say, wow, I wonder if that's important. You look back and you say it was also the closing swing high from yesterday, and it was the closing, like the low of the day preceding that. So all of a sudden you have to imagine, wow, 1389, there's something to this, right? And you want to, obviously, if you're trading 87 off the bell and the ES trades up to, well, you fade it. You start selling 89s because they're important. It may not work, but at least you know that that's a significant level that you can look at. I'm going to show you charts of this too in a minute, but this kind of stuff works. So, and I'll tell you, you look at 89, for instance. Now look, this was on a June 12 contract, right? On a non-farm payroll. This is back in June. And then look at the closing print yesterday for the S&P and tell me if it wasn't 89, 89 half. I'm telling you, it's this, this kind of stuff, it really honestly very important and can be quite helpful to you in your trading. So here we go. The bell's about to ring. You've answered the question, is there news? Okay. Check mark, right? Is there news? Yes or no? If there was, then, was there news earlier before the bell, like this morning? Yes, there was. Okay. Was there any significance, any big swing pivot highs or lows or anything like that I need to pay attention to? All right. I'm about to open. Or where are we opening? Are we opening today inside or outside, yesterday's range with any significance? No, it's going to open inside yesterday. Okay, fine. It's going to open inside. This was this morning, right? It's going to open inside yesterday's range. All right. So then you start looking around for, well, what about any like really important levels in the area? Like yesterday, the fact that the market traded 97 for half of the day, and you're opening 93 this morning, and you want to ask yourself, is there any significance in 97? I say yes, right? So at this point, you've got your key numbers, you've got kind of a game plan, and you're ready for the open. And here's how I would suggest you consider at least employing this, all right? So you're going to open at, 8:30 in the morning. This is Central, okay? 9:30 Eastern, 8:30 Central. All right, you're gonna open and note that opening print. It's a very important one. If you don't know what the open was, you really honestly need to write it down. I mean, I've got it to where it auto-populates on my charts because to me it's very important. I had a guy in Chicago, right, tells me, I go and I'm literally standing right there watching them trade, and they're yelling back at the clerks. They want to know, where's my, they know the open, and they want to know where's my, midpoint, my halfway back. They want to know basically who's winning, bulls or bears. Are we above the open? Well, you know who's winning. Are we below the open? Well, then you know who's winning. And that's what we're getting at here. So in order to know that, you have to know where you open. So you want to write down that print. You want to watch the market trade for a couple of minutes. I'll tell you this, there's a way to do it, but it's too hard to kind of really talk about in such a short session. So I'll just say give the market 3 minutes. And I can tell you that that's a study that's done over 1,000+ days of watching the open and getting what I consider to be the opening range, and that is when all the market on opens are coming into and flooding, the pit to, get all that market on open out of the way. Generally, it's taking about 3 minutes on average. It takes 2 to 4 sometimes, but I just say 3 minutes to really kind of flush through significantly or successfully. With that, you have the last thing you need, and that is the opening swing both high and low. You got a little resistance, a little support there. And I'm going to tell you this, and this is the way I do it, and I hope it works for you as well as it does for me, but I'll just tell you this. If you start to trade above that opening resistance that was just put in on that 3-minute period, then you really are going to be hard-pressed to be short. You need to be thinking long. And if you start to trade below that support level, then I'm telling you, in my opinion, you're really going to have a hard time being long. You really need to be thinking short at that time. And I'll show you some charts. And even, listen, let's go back and look at today's chart if you want. It works almost, about, I'll say 4 days out of 5, about 80% probability this works. The open this morning comes in at 90.25 on the S&P, trades up to 92.5 by 90.25. The minute that we traded through 92.5, the move is on to the upside. It traded 92.75, broke that resistance, and traded up to 97. Okay? And 97 was important. As I've mentioned here, you'd want to take note of anything that just literally jumped off the chart, i.e. the fact that the market traded 97 for half the day yesterday. So that kind of stuff's important, honestly. So you've noted your opening print, you've noted your opening swing kind of range or whatever when all those market on opens flood and hit and successfully flush through. You've got support and resistance now, and you're really pretty much ready to go. You're ready to trade. As soon as, like I said, this morning's 92.5 was taken out, you're ready to be long. And then you start to ask yourself, okay, and of course everybody's going to wonder, and you're going to ask, you're wondering right now, well, what's your target? How do you know what to trade to? The answer is, well, it depends on the day, but you know, so a lot of that's discretionary. If we all knew that, it'd be, you know, too easy a business to be in. But um, the targets become your key numbers that you've written down. You know, is there a 3-point gap from yesterday's close, this morning open that you're trying to fill? Yeah, that'd be a target. Or is it yesterday's high that's right there, 4 points out that you're trying to? Yeah, that'd be a target. You know, or is it in the case this morning, 97, where there's 4 hours of trade done yesterday at 97? Yep, that's a good target. You know, that kind of thing. So the the targets become those key numbers that I just told you to, you know, before the bell. And um, you know, I mean, it depends on the day. You're not going to know exactly which one of these numbers is actually going to be, you know, the dead high or low or anything like that. I'm not saying that. I'm telling you these make pretty good targets. If you're trading multiples, what do? You know, you trade into a 3-point gap, yeah, you take one off. And then you trade up to a 4-point yesterday high, yep, take one off. You trade into a big, huge pivot level like, you know, like one that we just described, yep, you know, you take another one down. All right, so promised you would get to some pictures, and here is exactly that. This is basically what you know, like what today's chart would look like too. Same kind of thing. The next one that I'll show you in just a second, I'll go ahead and give you a preview, will be just the opposite, trading down. Okay, a short trade here. But for right this minute, we're going to look at this chart, and this was actually one that broke higher. So here's they say a picture's worth 1,000 words. Here's a kind of a picture as to, you know, how you can do this. You see the open right here, that little red first candle right there. As soon as that high is breached, and it is right here on that second candle, then the trade is to the upside. I'll show you an exact opposite of this in just a minute, where, you know, the trade was down. Now, this is a 3-minute chart on an E-mini S&P. Remember, the opening range is about, I'm going to say about on average 2 points. It was again today, 2 points. But if you're a Dow trader, then you know that means 18. And if you're a NASDAQ trader, you know that means 4. And if you're a Russell trader, you know that means 1.5 points, because the Russell will trade about 7 or 8 tenths of a point for every 1 full point in the S&P. So that's how you can use this to trade some of those other markets as well. On average, you're going to have about a 2-point open right here for the first 3 minutes. As soon as the higher low is breached, then that's the direction you need to be thinking in terms of trading. In this case, the direction's up. Boom, you can see the trade's on. It actually starts to develop pretty quickly and work nicely. Remember, this is only 3-minute candles. But where does it go to? This goes to the key numbers that I told you we want to write down. You want to have like a price ladder drawn out before the open. It goes right to the prior day's low. This is the prior low on prior day on the left, and then we have a gap down situation where the open is down here. We break the high, we start trading higher, and look at the pause right there at one of those key numbers that we would have drawn, which had been yesterday's low. Okay, so you get a pause there, and then what happens? It trades up and pauses again at, well, wouldn't you know it, but the prior day's close. And so these are the numbers that I'm telling you. These become your targets, those key numbers that you're writing down. So basically what we just covered is that your open's going to take about 3 minutes to make up its mind which way it wants to go. As on average, it's going to be about 2 S&P points. And when either the support or resistance is breached, that's the direction I'm suggesting you want to think in terms of trying to trade. Once the trade is on, you are looking to target those key numbers that I've asked you to consider writing down, such as yesterday's, you know, high, low, and close, right? Well, there's the low, and it pauses, and then it goes right to the close and pauses again, okay? And, well, you see how the yellow line that auto-populates on my charts right there, that would have been, you know, a low. Well, this would have been a high up here, so it just trades, you know, from low to high, essentially, is what's going on here. So let's go to the next chart and we'll show you a short. This one's actually captured a couple of my trades on here, but one, you got to open here, and it's a couple of points, it looks like, in range right there. You had a pause right here for 3 minutes where the market did literally nothing, and once it broke down right here and broke below that low, you can see where that sells on, and the market trades down, finds a pretty significant level down here. If I can read this, I believe it says 1408, which I could certainly understand as being, you know, a pretty important level. But nonetheless, whatever it was happened right here. The market did trade up. Now here, check this out. Here's where I'm really going to be able to ring home with you, and I think make a point. Notice what's happening here when the market gets up and starts to flirt with that swing low off the open. There's a tremendous battle right in here. There's a lot of back and forth and fight. I actually started to short here thinking, well, you know, it's going to come up in there, and obviously it should go down from there. That's what I'm thinking. Yeah, I'm using a pointer. You can't see my pointer? Let's see what's wrong with that. You can't see a pointer. Let's see if this works. Okay, let's see if this, all right, here's the opening, here's the low on the open, right? And as soon as that broke through that low, I'm not very good at drawing with a mouse, then I'm suggesting as soon as the market broke through there, and it took like 6 minutes to actually make up its mind to do it, but it did, and it broke down, it goes down, finds a low down in here somewhere and trades back up. My point is this, look how when it came back up and found the same level here, right here, all the pause there's a tremendous pause right here for a while. Somebody just tell me when about 4 minutes is up. I'm gonna, oh there, okay, somebody's fixed my pointer or something, I don't know. So see, the pointer for me is the dot thing is behind the timer, so I can't get to the pointer thing. So here, check this out. Here's what I'm getting at ultimately, and that is that the swing low here on the open range was very important. The market came right back to it and started to dance around with it again right here in this area where I'm pointing again. All right, and then finally just gave up, and you can see the trade there. Finally just gave up and said, well, obviously it's starting to move to the upside, and but for the purpose of trading off the open, here's the deal. Give it a couple minutes, get the range, there it is, 2 points. Takes about 3 minutes. When that level's taken out, and it was here, then the trade is to the downside. That's my opinion. This is how I like to do it. It comes down here, it finds some significance in, I believe this is 1408 over here that I'm looking at. And when it did, it trades right back to this very same level and finds a lot of confluence, a lot of trade there in the same level, lending again significance to David says about 80% correct. Do you have a strategy performance report? A strategy performance, I don't have it automated. So I have a strategy performance report. What I can tell you is that you're going to see approximately 1 day out of the week where off the open, the high and the low are both breached, and that is about a 2-point range, and that's going to result in about a 2-point stop. It's going to stop you out for about 2 points on 1 out of about 5 days. And it might not, I mean, I try to be conservative. To be honest with you, it's probably not 1 out of 5. It's probably, it's not really that, just 1 out of 5. It's actually better than that, but I try to be conservative. But here's the neat thing about it. Look, you know where you're wrong. You're wrong immediately the other side of the bar, and it does happen, and it will, I promise you, come back and stop you out, but it's not terribly often that it'll happen. If you just open your own charts and look at it and decide for yourself how effective you think it could be for you. For instance, go look at today. Everything I'm telling you happened again today. It was a 2-point open range on 3 minutes. The range was breached to the upside, and it traded immediately up to a significant level that was given to us by yesterday's 4 hours worth of trade taking place at that level 97. And in our room today, we sold it. We sold 97s. And then the market traded down to, and check this out, yesterday's low, 84, yesterday's low. I mean, it's not coincidence. I'm telling you, I hope this helps. I mean, I really think that it can and will. I don't think we're gonna get all the way through this, but that's trading the open anyway. That's pretty much, that's trading the open. Okay, There's some other stuff in here, and we'll get to it next time I'm invited. Also, I can tell you, let's see, Morgan gave me an announcement here I can post. Here's an announcement. You can click on that link, and evidently it's a registration link to be able to come and just join me in the room, and we'll put what I'm showing you to work. Didn't get through all the slides. Apologize for that. There's some other good stuff there, but we can do it. We can do it again on a next time I'm invited. So, Morgan, again, thanks very much. I appreciate you having me, guys. Real quick, because I'm out of time. Is there any questions that I can help with really, really quick? Because otherwise, I need to hop off and let Morgan continue with his event. Okay, I'm going to go to the sidelines and thank Morgan again for having me. I like to help when and where I can, and so hopefully this helped. That's all it's intended for, is hopefully it helped. Thanks, guys.
All right, thanks, Neil. This is Chuck, by the way.